markets there. And on that note, European leaders face a stark choice this evening. French President Nicolas Sarkozy and German Chancellor Angela Merkel will meet in Paris in just a couple of hours' time to discuss ways to contain Europe's debt crisis, which is now spreading to the continent's core. They'll discuss whether to steer the Eurozone towards a closer monetary union or risk watching the bloc unravel. Many experts say the zone may be forced to issue joint euro bonds, although the German government has long opposed the idea. And for more on this, I'm joined by Gemma Godfrey, Head of Research at Credo Capital, and she joins us live from London. Gemma, are we expecting any kind of miraculous solution from this meeting between Sarkozy and Merkel this evening?
Well, markets are looking for a long-term solution, but politically and economically, this is actually now even tougher than it was a few months back. Politically, Germany, already domestically, there's a lot of opposition at the amount that's already being put aside to actually bail out other countries. And there's an election on the horizon. And then economically, we're seeing weak growth GDP numbers that are coming out, which means there's less room to manoeuvre.
And everyone seems to be calling for the introduction of Eurozone bonds, but I guess this is a lot easier said than done given the 17 members of the EU and Germany's stance on this.
That's true. I mean, the Eurobond has been called for by a lot of investors. It's seen as the least worst option. However, others are cautioning that it might make the situation actually worse. I mean, Merkel has already come out and said it's not even an option and it won't even be discussed tonight. But the reason behind this is because sharing that interest burden would weaken the few countries that actually remain solvent.
So Germany not keen on this idea of a Eurobond. It says it prefers fiscal consolidation. Does this just mean more austerity measures?
That highlights very well, actually, the divergence between what Germany and the ECB want and actually what the periphery needs. And you're absolutely right that austerity does not foster growth. And the ECB and Germany, so they're on the austerity camp, but periphery needs growth. And the reason behind that is that the debt burden is growing, and without growth of the economy, the situation actually becomes harder and harder to handle.
You mentioned this periphery. We saw some weak German GDP numbers out not long ago. Are we starting to see the divergence between the growth of this core and the periphery narrowing?
Well, I mean, that's one way to look at it. And another way is actually to see that the situation is deteriorating across Europe and starting to reach the stronger nations.
We saw European stocks... Sorry, Gemma, continue.
Oh, I was just going to say that the German GDP growth numbers that came out, it was 0.1%, and that even disappointed consensus.
And I gather that's what's turned European markets lower. We saw them trading quite starkly lower about midway through your local sessions there. And also Dow futures taking a tumble. Is this what's behind all these losses on global markets this evening?
Disappointing growth figures are driving the markets down lower, and we are seeing movement towards safe havens instead. So gold's rallying, and we're also seeing the Swiss franc, remaining at elevated levels. On the positive side, tech stocks seem to be doing quite well because of takeover activity, which is just highlighting the fact that at the company level, there are still deals to be done despite a tough macro scenario.
Gemma Godfrey from Credo Capital, thanks so much for your time today. Moving on now, and Qantas's ambitious plan to launch 2 Asian-focused airlines is under threat. Transport Minister Anthony Albanese says the government wants to ensure